Good morning, everyone. Welcome once again to our weekly broadcast. And Thursday, 10 a.m. again is my normal mantra for starting off our broadcast. Delighted that you're able to join us, or if you happen to be watching the recording of this on YouTube in your own time. Perhaps you're walking the dog or going for a run or doing a bit of work with us in the background. You're very, very welcome. So for those who may be attending for the first time, my name is David Johnstone. I'm the CEO of a company called LEOcrowdfunding. We're an equity property crowdfunding platform. And my normal co-host for these events are Mr. John Corey. Over to you.
Good day. John Corey, Property Fortress. We care, community apps, real estate investing together in education. And today should be an interesting conversation for us passive investors.
Thank you, John. And delighted to also have one of our regular contributors, Mr. Dalray, investor portfolio manager with LEOcrowdfunding and a good experience background in property and finance. So Dal, over to you.
Yeah, good morning, everyone. Pleasure to be here once again on a Thursday, as David likes to mention. But yeah, I'm sure a lot of attendees I've already spoken to at some stage. But yeah, I've been in LEOcrowdfunding for around 18 months now, David, I think. Where's the time gone?
Did
yes.
you get your 1-year anniversary gift?
I believe I got a card. Thank you, David.
Yeah. It's the 2-year one, John. It gets more interesting.
Yeah.
I see. Okay, good. Well, we'll get it on the recording soon enough.
Yeah, it's not far away. You know, are you home office, Dal, today, or sort of London office?
No, I'm in the home office today.
office?
So back at the office tomorrow.
100%. Okay, let's get on into today. So yet another market update with yet another change of Prime Minister. So Rishi Sunak is now the new Prime Minister. It's probably never expected it 7-8 weeks ago when he lost the leadership election. However, he is now in place. Circumstances have put him into the position he is now in. Most feedback seems to be, and I want to obviously see what John and Dal, if any comments they've heard sort of just from people they talk to or anecdotal evidence, but most feedback seems to be that this will be pretty welcomed by property people in the property sector. I suppose above all, the possibility of a wee bit of confidence and a bit of stability and a bit of assurance in the near future, which is probably what the market's been lacking in the last couple of months. But well, first of all, any thoughts on Mr. Sunak as the new Prime Minister, and any feedback from people's reactions?
Well, let me say that I'm not a British voter, so I don't really have a strong bias. I happen to like what the guy says. In general, I'm not a Brexit supporter, so I wouldn't agree with him on that end of it. But on the end of it, of being rational, being pragmatic about the market and the economics, I think Britain's learned or been reminded that, similar to the US in the 80s and things like that, that the bond market matters. You can't just do what you want and expect no one cares, particularly if you need everybody else to pay the bills. When it comes to property, do we have a new housing minister yet? You know, we've had 15 or something in the last 5 years, I believe. So,
yes, the poison chalice. I'm not sure if I heard that. Don't know if Dal you'd heard that or not, but I'm sure we could.
Not for housing yet. No, I don't believe so.
Yeah. So.
I think it's actually normal that we have, quote, a person of color, or whatever the right phrase is, that the British society is really quite neutral from what I can see on the topic, that we try to elect people that we feel represents us the best, rather than worrying about where they've originally come from. So I think that's a big positive, and I think that's at some level a big sign, and another level it's so not a sign. It's just, what do you mean? Why is that a sign? Oh, yeah, okay, forgot that type of thing. So it's this another sign that we're multicultural, and that we go for who's the best person rather than where their ancestors grew up.
Yeah, I think that's certainly significant. And as it says there in the quote from the House by Fast, Mr. Sunak is not a magician, and
Yeah.
there isn't any easy fix to the circumstances that the economy finds itself in, or indeed the property market finds itself in. So, I don't know, Dal, any of your sort of friends, associates, any reaction to Mr. Sunak assuming the position of PM?
Yeah, I mean, for us, obviously, given Richie Sunak's experience, I think certainly adds weight. He's a figures man. I think that's what we need. So that's a bit of a mixed opinion, I guess. Some think, yeah, he's not the right person, or possibly, coming from the background in terms of wealth. He doesn't understand the kind of the general consumer, but others are certainly embracing and looking forward to his challenge. And like John said, he's realistic. He understands there's a problem, and he's actually seems like he's doing something. And he's called it with Liz during the talks in regards to kind of what her mini budget would look like, and how that could affect inflation and sort of mortgage rates, etc. So I think he's definitely the right person for the job, in my own opinion.
I'm absolutely loving it that John, that Dal called the previous Prime Minister by her first name, Liz. It sounded like he was on first name terms there, friend. So,
well, she's only there for about 44 odd days, so yeah.
Yeah, exactly. Don't get John started on Liz Truss. We better move on quickly, or we'll lose up all our time.
Yeah.
So, before we move into today's topic, some of the coming soon.
Wait. I do want to highlight one thing. Is a friend of mine pointed out that we're now much younger. It's actually younger than me by a long shot. So it's this moving down generationally, or that this is the youngest prime minister. She was relatively young too. So we're in this more maybe in the middle of the age range of the voters now.
Yeah, that's a good point. That's a very good point. So that generation does say the word differently than the previous generation, as every generation does. So yeah, I think that's a very valid point. Right. So coming soon, projects. There's been so much activity behind the scenes getting these all ready, and they're all sort of about to like London buses all come along at once. Whenever you've been waiting for them. So we have the Becontree Avenue Dagenham raise. It's the second tranche. I think, Dal, the second dividend was paid out just this week on Becontree,
yes,
I believe, yeah?
Yes, that's right. So 25th and 26th, we sent out an email to all shareholders. So that second tranche or dividend payment should have been sent through above the projected return on investment as well, which is great to hear.
Yeah, it was 3%. I think was the projected. It was a 12%, per annum. So what did it? Do you remember offhand what it paid out?
Yes, it was 3.75 this quarter. So
excellent. Okay.
Both
very good.
quarterly payments above the projected. So even the first quarter as well. I believe it, from memory, it was 3.25 or something along those lines.
Yeah, it was definitely over. Okay, no, thanks for that. So that's again, when that goes view deal, people can have a look at it and see if it's something that they're interested, like an income product. Second one across then, Stafford Gardens in Catteringham. It is a planning uplift project for 42 apartments. And then the new coming soon is Church Road in Winterbourne Down in Bristol, another one by Ed Morgan. He had the planning application on this single dwelling construction approved, and now he's coming back for some equity finance for the build phase. And John, is something that we've talked about from really right the inception of LEOcrowdfunding, is that you can raise funds for all different stages of property. We've got a planning uplift, we've got construction, we've got an income product, and that's really one of the beauties of crowdfunding.
Yeah, it's if you think about risk management, I don't want to pay a premium for something that really isn't the risk. So during the planning phase, there's a particular risk of not getting planning, and therefore the investors should be aware of that and they should be compensated for that. When you get to the build phase, now planning's already secured. the risk profile is different, whether it's higher or lower, sort of doesn't matter. The point is you should pay for the risks that people are exposed to when you ask them to invest. So in this site or this address, this is the second raise. We had the planning raise, which I was investor in. And now this is the build phase. Now the planning secured, and the investors from the planning phase will exit. Those that want to come back around can do so, but they can make a fresh decision. They can reevaluate where they stand, what's going on, what their appetite is.
Mm-hmm. Thanks for that. One quick update on the Dinlickety house project. So it had launched live last week, and people had invested in it. There were just some personal circumstances with the family, with a family illness, and if those who are familiar with this one, it was quite a I don't want to say complicated, is not the right word, but complex. There were a number of moving parts. So we've had a look at it, and we're actually just going to give some brief amendments to the document, clarify a few points, and then it'll be back on live again. So it's just if anyone had invested and see it's no longer live, it's now coming soon. That's just a quick explanation for it. So I don't know, John, if you have any comments you want to make on that?
What's good about this, and it plays into our conversation as we get to later today, there was some really feedback from a number of investors, and the people that are running the project wanted to clarify those points. So this is part of the dialogue that happens when it comes to a public crowdfunding raise.
Yeah, that's a good point. So you watch out for that, obviously, when it goes live again. So next Wednesday, again, for those who've been on the last couple of weeks, note a date change. This was going to be the 3rd of November, and then it was announced it was going to be a train strike. We're going to pivot to the 10th of November, and literally, Dals, we're about to press the email. Another announcement came out that says there's going to be a train strike on the 10th as well. So it was like, okay, here we go again. So we just pivoted back to the 9th. So Wednesday, the 9th of November is going to be a property investment network event. And really the topic on the evening is investment strategies in uncertain times. There's going to be like short sort of 10-minute presentations by AJ from PLMD, by Dal, investment portfolio manager, and myself, just around the topic of investment strategies in uncertain times. Brief 10-minute presentations, a panel, and then the rest of the night's networking. So there'll be some refreshments. AJ and his team put on a brilliant event a few months ago. It was really about 40 odd people were there. And we're actually, Dal, doing a shareholder meeting for Becontree before this event starts. So those shareholders can come along, get the update on their project, their investment, and then obviously stay for the main event. So the last one was brilliant, Dal, wasn't it? I really enjoyed.
Yeah, very, very good. Great turnout. Good feedback from not only the shareholders, because that was the first quarterly update for shareholders for Becontree Avenue, but also anyone who then attended after the event. So at 6:30 would be the shareholder meeting for Becontree, and then it will go on from 7 onwards for kind of everyone else across kind of the investment side of things. Great turnout, over 40 odd people. So yeah, it was a very, very good night.
Yeah, so looking forward to this. Along the bottom there is the Eventbrite link. You can quickly screen grab that, and you go on our social media, you'll see it, or just email it to Dal, and we can get that to you. So that's Wednesday the 9th. Note the date change. Wednesday the 9th of November. Registration and refreshments are at 7 p.m.
Can that be dropped into the chat for those that are attending live?
Yes, Dal, could you?
Yeah, I could do that.
Brilliant, thank you. That's a good call, John. Thank you. Okay, so next week's topic, and this is why it leads into this week's topic. Next week, looking forward to this, John. I know you're going to absolutely love this. David Wilby is one of the senior partners of Lewis Silkin Solicitors. So someone who is into the minutiae of shareholder agreements and option agreements, etc., being a commercial lawyer. And we thought it'd be really good to have him along just to talk about the legal documents in property in general. So if you're doing any sort of documents, maybe a JV agreement with someone, an option agreement, exclusivity agreement, what should you be looking for if you're a fundraiser? If you're an investor, what should you look for in those documents if you're making a decision to invest? And then specifically to crowdfunding is the shareholder agreement. we're going to be discussing that and why it's so important and what investors should look for in the shareholder agreement. I think, John, there's a tendency sometimes in documents that people just skip to summaries and just think, oh, I can't bother reading that. But it is essential that people understand the importance of documents.
Yeah, I mean, it's always a difficult one. You want to read the whole document at the same time. People are time pressed sometimes. And as you read more of these, you get used to how they're structured, so you know what parts haven't changed because you can scan them. But I do really recommend, particularly people that want to raise money in the future, invest in some of these deals, or at least pledge in some of the deals, whether you sign up to be a full investor in the story, but read the documents. This is an opportunity to learn what they say, see what best practice looks like, how they're structured, so you can speak to them when you want to raise money. And people say, well, what about this? You know how others have done it. And they are sort of long, but the way legal documents are structured, they're not a hard read, because there's sort of overview and setting out terms, and then there's the meat, and then there's the appendix, and the appendix is to support what you've already read many times. So you can be a little bit pragmatic about concentrating on the body of the document.
Okay, so we're just leading into next week. This week we're just going to highlight equity offer documents and financial promotions. So if anyone has any comments on this, any questions about this, then please stick your that comment into the Q&A. Dal can keep an eye on that, and we'll be able to whether it's John, me, or Dal, whoever picks up to answer it, we can do that. But this is a really important part of crowdfunding, and a lot of fundraisers and investors, sometimes it takes a while for them to really understand the primacy and the importance of the equity offer document. That this is the key document that investors should be looking at to decide if they want to invest or not. Now, the Section 21 Financial Services and Markets Act is where this kind of starts, in terms of a person must not, in the course of business, communicate an invitation or inducement to engage in investment activity, etc., etc. So there's obviously, this is a legal matter, and then you move into the FCA's policy statements all around this, which we talk about regularly. But John, I think the summary is the financial promotion of the document. The big three words that get used are: it must be fair, it must be transparent, and it must not be misleading. And that's, every document should meet those three criteria.
That's true, and they're meant to be subjective, in the sense that for something to be fair, if you're going to highlight the benefits, you should highlight the risks. If you're going to scream from the mountaintops how great the benefits are, you have to scream from the same mountaintop on the risks. If you're going to have a very light touch comment about a benefit, you can have a light touch comment about the risks. Proportionality matters. Transparent, so that people can actually understand and see what's going on, that you're not hiding things, you're not trying to obscure things. It could even matter like what photos you pick and what other ways you represent the information. Is it transparent? Can people get a good understanding, and is it fair? And then this not misleading. This is where people fall down on the probably all three, but particularly the last one. When you have something you want to raise money for, you're very excited about it. You're very positive about it. It's better than this, or beat the bank, or all these other statements that, like, hey, they're not allowed, or they're not proportional. They're not fair. So it's meant so that an uninformed adult who's educated enough to read the document should be able to get a view of the document and form their own opinion. And they're not being led by the nose, so to speak.
And if we get into then, Dal, just in terms of most of our documents, we try and have them all quite similar, so investors get used to the reading order. I mean, what's normally in the equity offer document?
Yeah, I mean, fairly much the high level stuff. So, bio, a little bit about the background of the developer, of course, the risk warnings that we need to kind of make sure that it's kind of always, clear. And the principal message around kind of what the project is, the type, and what's on offer, the financials, the exit strategy of the actual developer as well, and then we'll go on to kind of the term sheet, what's on offer with regards to the actual equity raise itself, and then disclosure and conflict of interest, as you mentioned.
So it's every document should have these, and that's why it becomes it's obviously financial promotions approved by our FCA principal, and therefore
every approved document would have these. And I want to warn
correct.
people, there's a lot of financial promotions out there that are not approved. They're not actually legal in many cases. People share stuff all the time that they think they can share, and that's not what we're talking about. We're talking about an FCA authorized person approved document, and this is a good summary of what to be looking for when you read it, so you can structure how you read it.
Yeah, and it usually goes through 2 reviews. Our FCA principal Sharon will have an initial review, and then a second person will also read through it, which is good practice. And if there are things that aren't clear, there might be a couple of questions come back. Can you clarify this paragraph? What exactly is meant by what's said in this paragraph? Or if they maybe identify some conflict of interest that we haven't identified. So really, it's getting 2 pair of eyes within Leo crowdfunding, 2 pair of eyes within our FCA principal. So by the time it hits the investors, it's a pretty robust document. Doesn't mean it's perfect, but at least it's robust, that it covers all the main topics off. And then Brenda's favorite obviously with a note of sarcasm in my voice, Brenda's favorite activity is the statements, material statements is the phrase. So the document has to be read, and every time there's a claim made, that has to be substantiated. So if someone says, "Oh, this is the highest place of rental in Liverpool in this street," well, that's a claim. Can you back it up? Where's the evidence of that? So that document again goes through that process, which is tedious, but it does mean then that when it's hits the investors, then the information contained has been at least been verified. Now, John, obviously the as well as those 3 big words at the start, the risk warnings is something that the FCA pay a lot of attention to, that any would-be investor understands the risk. So the first page after the main page is always the risk warning. Couldn't be any clearer, states it very clearly: high risk investment, which property is. You could lose all of your money invested in this product. And that it can't be any clearer than that. But still, some investors, even having read the document, will sometimes in their mind have that there's some degree of security or their money's safe. That's just the market, John, or what else can these do?
First of all, that first one, number 1, high risk investment, you could lose all your money. That is the same risk warning that is required if this was a debt raise. And Leo, as a platform, only does equity raises. But I'm willing to bet that all of you who are listening, either live or in the rebroadcast, have been looking at documents that don't have this risk warning. And frankly, that's a problem. If you think because there's a charge, your money's protected, well, it isn't. That's why that risk warning should be jumping off the page. And if it isn't even in the document, I would suggest you walk away. The idea that they're trying to put you on notice that this is an investment. Investment has risk. You don't get returns without taking some risk, and you could literally lose your money. The second one is all about the fact that there's no safety net that's going to suddenly swoop in and pay you the money that you just lost out of this government-run fund. The FSCS fund is not available to investments through Leo crowdfunding, and therefore don't even think about making a claim because your money's not protected by that. You are making a decision. It needs to be an informed decision, and it has to include only investing money you're prepared to lose. You may not lose it. You may get a positive return. That's all fine, but you must be prepared to lose it.
Mm-hmm. That's something, Dal, that obviously in conversations that you end up having with investors from time to time, it's obviously something that you're mentioning and making sure that there's somewhere in the conversation amongst all the questions about the project that you'll emphasize, look, understand the risk, that the investor is taking the responsibility for their decision. And these risk warnings were sort of red flagging, if you like, that you got to be aware of the risk.
Yeah, absolutely. I mean, that's always forefront. We need to, as well as how great the project might seem, the investment might seem, I would always make it apparent that they need to understand the risk warnings, whether it be by the platform when they're answering the appropriateness test, or of course direct them onto the equity offer document as well. So, certain words such as we're guaranteeing, and I'm sure we're going to go into financial promotions in a little while, but those types of words you're not allowed to use, of course, following the FCA guidelines. But yeah, it's always the case. It's always the forefront of every conversation that I have with investors.
Yeah. Okay. And we discussed a few weeks ago PS 2210, where as part of the risk warning journey, if you like, or the milestones where risk warnings are inserted. In the latest policy statement, the FCA have inserted another risk warning in the registration process that literally comes up, making it really clear, like an individual risk warning as they're referring it. So as someone is clicking through, up it pops. Again, the fact that you could lose all your money in this investment. So it's really clear. Moving on then to the term sheet, and Dal, it's one of my favorite pages of the document. I tend to really focus on this page. Not that the rest of the document isn't important and everyone should read the rest of the document before John jumps in and corrects me. But I tend to go to this page almost immediately when I'm looking at it, at proofreading it, because I want to be really clear is, okay, what are the headline numbers? And this term sheet for me, like, covers all the main information. So it's the GDV of the project, exactly what's been raised, the min and the max, exactly what the ROI is projected to be, what is the projected net profit, how long is the investment, what's the minimum investment amount, all those important bits of information are all in one place. And I think it's a really good sort of capture. So, and again, I think the feedback from investors, Dal, has been that this is a good page to be that summary.
Yeah, I think a lot of investors I speak to, tend to obviously concentrate on this particular page. Obviously, again, as you mentioned, the whole document itself is important to read, but this is very much the high level detail of the project itself. So any information that you want in relation to kind of payback, the amount investment, what the actual developments are looking to do, and what they're giving on offer is highlighted on this term sheet. So it's certainly a good way to kind of understand what's going on.
Any comments on that, John?
Just, yeah, the last one is interesting. People have to focus on the fact it's a percentage of net profit. Generally, this is paid out as a dividend. And for dividends to work, you have to have profits, and you pay out net profit. So it's after tax. And these are things that are covered in the document. And if that was a surprise to anyone listening, then, just look at some of the documents. One of the beauties of using Leo is you can see what other people are doing in the marketplace. You can see what other people are offering. You can see how they explain their deals. So if you're going to raise money in the future, this is a way to find out what the competition's doing, so you do equally as well.
Okay, thanks for that. I think this is the last slide before we wrap up. So another important part to be aware of, and we have this conversation with fundraisers more so than investors. Obviously, it's important investors read it, but the fundraisers need to understand why these are important. There's the disclosure and then the conflict of interest. So one of the things the disclosure highlights is this document is not investment or legal advice, which again is very important on the investor side. But we have had situations where directors of the SPV or family members of directors of the SPV wish to invest as investors into the project. That, of course, is a potential conflict of interest. It's a disclosure that investors should know. So if a raise is 200 grand on the platform, it may be that some of the directors of the company or their family members or people connected to the company have actually invested part of that 200,000. So it's important to be aware of that. And it obviously goes on. Then you can see the nature of the document. This document has been approved by Sharon Limited as the financial promotion for the purpose of Section 21 of the Financial Services and Markets Act 2000, and obviously further details are available on the FCA website regarding the nature of that Financial Services Markets Act. So again, what I love about this, John, is that this document, when it's gone through the process and is actually then put on the platform for download and review, it is signed off as a financial promotion, and both investors and fundraisers like need to just pause at that point, because sometimes we don't give it, if you like, the importance that's actually due. This is not just someone firing something up on social media. This is not just someone going rogue. This has actually been an approved document, which is why fundraisers should consider crowdfunding when they come to launching their investments. But like, that's crucial, John. That's really what it's all about.
Yeah, it's approved for promotion. It does not mean that the FCA or anyone associated or approved or authorized by the FCA says it's a good deal. They're just
Correct.
saying the information is fair, transparent, and it's there for everybody to read. You have to make your own decisions, but it is quite a step forward that someone has thought this is a good way of describing a project. So for financial promotion purposes, and it can be distributed to anyone that's 18 and older in the UK who's of sound mental mind. So it gives you full retail distribution when it comes to your ability to promote to anyone in the UK.
Yeah, and that's the key, retail distribution. So this can go to the mass market, if you like, as in the restricted stroke retail category. And therefore you've got the opportunity to promote it on social media, provided the social media posts have been approved as well.
Yeah, every post, every message, every tweet has been approved as part of the process. It's a great way to build your brand.
Yep, absolutely. One of the other side benefits. So Dal, just one thing, conflict of interest, that again with developers sometimes we've got to highlight this. There's many cases where the fundraiser, as the developer, either owns or is part owner of the construction company that they have the construction agreement with. So therefore, that is relevant information. That's potential conflict of interest. You know, is the market rate been charged by the construction company? Is it inflated prices so that the SPV's got less profit, therefore there's less profit to go back to the investors? You know, that's an example of a conflict of interest that would be highlighted in the document if it existed. Yeah,
no, absolutely. So, you know, obviously speaking to fundraisers actively, and I've also prepared a couple of equity offer documents with the help of Brenda recently. That is something that we look into. The due diligence has to be done. You know, company house checks have been done as well on that particular SPV, for instance, so that we have a better understanding. And if there is conflict of interest, then of course it needs to be, as you mentioned, highlighted on the document as well. Mm-hmm.
And just to sort of pivot on that then to next week, why we've been emphasizing the importance of the equity offer document. It's actually not the primary document when it comes to a completed funded project. So if you're an investor and you have pledged your funds, the project's been a success, you will then be sent the shareholder agreement. And that is the legal document on which your relationship with the fundraiser is based. You get a chance to review that. If any tweaks are required, the fundraiser may, based on feedback from the potential investor shareholders, make some tweaks. Then a final document is issued. And John, that's a take it or leave it document. And when we get to that stage, the shareholder agreement is issued. If an investor isn't happy with a clause, isn't happy with some aspect of it, they just decide not to proceed. And those that are do proceed.
Yep. I mean, the shareholder agreement set out, there's a review period, feedback's received, it may be typos or whatever, the final version goes out, and then it's a take it or leave it, sign it or don't. If you don't sign it, your money never leaves your wallet. Basically, it goes back to you, and you can leave it on the platform, or you can actually draw it back out. If you do go forward, you now have a signed agreement. This is a really good step because it means everybody signed the document. You know, everybody had to sign it. You get a list of all the shareholders. If you're one of the shareholders, this is your contract between yourself and the people you're investing with. And it is whatever the offer document said, in a sense, doesn't matter unless it's in the contract. So read the offer document, make a decision, then read the contract, the shareholder agreement, sure it covers what you think it should cover.
Yeah. And so next week, we're going to have David Wilby, Lewis Silkin Solicitors. I know, John, you've been on a couple of calls with David, perhaps not recently, but certainly months ago, regarding just the nuances of shareholder agreements and making them accurate for the fundraiser. You know, we find him someone who is just really efficient at understanding the nuances of property crowdfunding. And I think you certainly expressed your I don't know if enjoyment is the right word, but productive calls we've had with them.
I think David drafts the shareholder agreement in a way that makes it easy to get your head around, and that it's sort of well organized. So if I'm working with the client, and I do have some clients that have raised money, which will be in the disclosure section, that David is a lawyer that I recommend to them. They can pick who they want, but he's one of the people I would say they definitely need to look at when it comes to drafting the shareholder agreement.
Yeah. So David will be here next week to go through the as well as legal documents in general, specifically shareholder agreements regarding crowdfunding raises. So really looking forward to having David next week. I think that will end up in one of the well-watched recordings as well, as people deep dive into that one subsequently. So that's us for today. Thank you very much, everyone, for joining. Again, if you want to go back and rewatch this recording or any of the previous recordings, you can go to a YouTube channel. So it's youtube.com/LEOcrowdfunding, and you can reach out to the support email there on the screen. So any last comments from Dal or John before we wrap up?
I'm all good.
Perfect. Thank you for that, and look forward to seeing everyone next week at 10 a.m. Take care. Have a good weekend, everyone. Bye-bye.
Thank you.